we're in this golden era of investing where what would have taken, professional level analysts working for some private equity firm, we could now do this ourselves.
This credit card thing, it just seems pure predatory business model to me, like morally bankrupt.
Living paycheck to paycheck is actually a reality that way more people are under, even though it's, I imagine most people try to hide that fact.
Don't be ashamed or embarrassed to use the tools that are available to you. If you're using AI, you still have to sort of distrust it to some extent and look for like multiple sources and do your own research.
For an advertising-free version of this show, check out wallstreetwildlife.com.
Welcome to the Deep Investing Jungle. Your host, Luke the Badger Hallard and Christoph the Monkey Piekarski. This week, why am I furious at this Silicon Valley startup? Plus, PayPal to UiPath. Why is Christoph changing horses? And he's also got an improvement to his investing workflow that might help you too. Are SpaceX about to IPO? We'll chat about that. Plus, Christoph's got an ASTS update for us. And if we get time, we're going to field a Patreon question about Nintendo and maybe put my reverse DCF spreadsheet to good use.
That's right, Badge. Top of the morning or afternoon to you. I've been hearing about the ways you are so mad. I can't wait to see your claws coming out with this gamification of debt thing you're going to tell us about. But before that, before you start ranting and raving, I feel like you sometimes underappreciate the outfits I wear for you. So first of all, I put on, maybe this isn't so much for you, but this is my slothy shirt in honor of our resident sloths. I think we both acknowledge how nice it is just to get supported, with no whistles, no strings attached, just a couple slothies saying we like what you do over our Patreon. So slothies, this is for you. And I want to point out that I'm wearing a new hat, which you could see there's a beaver here, and it says "Rise and Grind." Nothing like a little morning wood to get your day started, right, Badge?
Okay, is this a crossover from the OnlyFans that you're doing now? Katrina calls our Patreon, by the way. She's like, oh yeah, Luke is just chatting to his people on OnlyFans. Right, awesome.
That's right. Monkey has many branches from which he swings.
All right. Well, do you want to hear about my morning wood that I want to take to this freaking Silicon Valley startup?
Yeah, you let me know about this a couple of days ago, and I looked it over very generally, and I couldn't wait for you to really lay your claws into this. And I'm curious to what extent I'm completely on your side or whether I see some nuance. So let it rip.
Yeah, I mean,
what's getting you so pissed off?
Yeah, and it has. I was trying to avoid like the expletives because like YouTube really doesn't like that. But there would be a lot of F words in this if I was chatting to you with a beer. It's my hot button. Any company that like exploits people in financial difficulty, like the classic was 10, 15 years ago. The like predatory loan companies in the UK. There's one called Wonga that thankfully went bankrupt. And they extend like payday loans, essentially like short-term unsecured loans, punitive interest rates you never get out from under. Well, here's the latest innovation backed by Andreessen Horowitz, like A16Z, their fund. It's one of their kind of startups out of their incubator, I think. I don't want to give these guys too much like coverage. I would just say they're called Covered. And essentially, it's like gamification of debt on your credit card. So you have like a bunch of credit card transactions. And if you want to gamble for one of your credit card transactions, you like sign up. I guess you link your credit card bill. I haven't signed up because I don't want to help their like daily active user stats. And then you can gamble a transaction. So, I just bought I know, something from the butchers that I'm cooking for my friend Mike and Monica this weekend. And I could gamble that transaction and maybe I win back the cost of that beautiful piece of meat. Or maybe I lose the gamble and I end up with extra debt. And this is so horrible and so dangerous in a couple of ways. Like if you're a responsible credit card user, you pay off your bill in full and you don't get buried. And actually credit cards can be a useful tool. Unfortunately, a lot of people are not responsible credit card users, and they like roll debt from one thing to the next, and they're paying down like interest, and it builds up, and it just turns, it's like it's one of the key legs of the stool that just destroy your financial future. A bit like this idea of 50+ year mortgages, but let's not go there this week. Like you want to get compounding working on your side, and compounding is working against you when you have debt, particularly credit card debt, because that's, like directionally 30-odd% APR, which is, that's punitive. You don't want to be paying that, don't have to.
Yeah. Hey, Patrick, real quick, are you lumping buy now, pay later stuff into this kind of same category of predatory?
I've got my problems with, but let's not go there this week. I don't like, a lesser problem with that, but I do have a problem with that. I want to go after these guys covered particularly because I think they're doing something, not just they're offering like a horrible financial product, like it's really insidious, the mental trap that they create. Because if you've got credit card debt, they're like gamifying it, and maybe you sort of win, and essentially you start to like mentally assign, like sort of fun with purchasing some household good, and you probably get end up spending more on your credit cards because you're like, oh, I can just like spin the roulette wheel or whatever it is, pull the handle on the jackpot machine and maybe win this thing back, get it for free. And you probably tell your friends about it when you win, and it's just going to create this like cascading horrible situation.
Badge, the link you sent me, here's what I saw. Just tell me if this checks out. In part of their marketing, they showed somebody buying a relatively decent sized item. Let's call it a new laptop, right? Call it a $2,000 purchase, right? You then do this product or whatever, you sign up for it, and then you take a chance at the roulette wheel, and what they show you is all of a sudden you winning, and that big item product gets paid for, right? And so to your point, if you have an issue or you're already in debt and you think, oh, I don't need this thing, but I'm going to buy it because I'll get lucky and it'll be paid off, then all of a sudden like you're saying, right? You're incentivizing buying something you don't have money for because you could potentially win gambling. Is that right?
Yes. Yeah. That's one of the many problems I have with this, but yes, that's very important. Yeah, exactly. And, there are regulations in like functioning democracies, which includes the US still, to prevent crap like this. But these guys sidestep it because it's not like illegally, it's not gambling. It's legally classified as a sweepstake because of the mechanism. I'm going to try and explain it. The mechanism by which they do it. Like you don't use gamble money, you buy like tokens, covered cash, and then you use the cash to gamble, which you can redeem back into something. It's all just like BS, like sidestepping the regulations. And hopefully the regulations come and slam these guys pretty quickly and they get shut down. Who knows? But the other thing is horrible. Like I actually did dig through all the terms and conditions. I read as much as I could on their own website. And they don't even, there is a house edge here. They imply there's a house edge on every bet, because of course there is, right? Because it's a business model. They don't even disclose what the house edge is. They just say, they give you like a really sort of hand-wavy formulae, and they say, each transaction, the house edge might be slightly different. So even if you were going into this as a sort of air quotes responsible gambler and you wanted to have a little bit of fun and find other places to have fun, but if you wanted to have a bit of fun, you don't even know what the house edge is and what your return's going to be.
Right. Tell me if this sounds right. When I go up to the roulette wheel, at least I know whatever, I could mathematically calculate the odds, right? There's a green zero, so I know it's not 50-50 if I choose white, black or red. But then when compared to going up to a slot machine, I don't know what the hell. I know I'm just burning money and it's calculated to pay out with enough frequency to keep you coming back, right? This seems obviously closer to the slot machine model.
And even a slot machine, there's regulations that apply to them. It might be something like I'm making this up a little bit. I think in Nevada, it's like a 15% house edge, something like that, across slot machines, depending on how they're designed. So even then, like your worst case, if you went and read whatever the Nevada state gambling regulations, whatever applies to your state. With these guys, though, it's a sweepstake. I think they can kind of do whatever they want, and they don't disclose it. I think you see it at the time of the transaction. But if you're excited, do you read all the small print every time you spin the wheel? Anyway, like, it's horrible. F word, A16Z, Andreessen Horowitz. They shouldn't have gone anywhere near this. But whatever. Like, I mean, if you want to sort of attack my attack, now's your chance. But otherwise, let's talk a little bit about like what's going wrong in Silicon Valley, that things like this are coming to market.
Yeah. Okay. I have a whole bunch of stuff to say to that. I legitimately don't think I have anything to attack on your end, Badge. I do a lot of philosophical work and a lot of work around ethics and morality. It's really important to me. And usually investing and those kinds of things, you keep them separate because money is money, capitalism, markets, right? You don't want to interfere and all that. But you bringing this to light here, to me, is such a obvious evil. I mean, really evil. I mean, biblically speaking, lending out money, usury is considered one of the worst things you could do because you take people who are out of luck and then you take advantage of them and make their lives even worse under the auspices that you're somehow helping them. So it's got this like insidiousness to it, right? So I feel I fully support your view here. I think that's correlated to two levels that feel similar to me. One, the larger broad thing is what happened with social media in general, and I think why you and I both, I think, had a bitter taste with a company like Meta over all these years because they did whatever they had to do to get people onto the platform and addicted, and then they start selling your data, and then the algorithms are set up so you're constantly checking the Instagram, turning us into addicted hamsters, more or less, right? That whole slot machine in your pocket thing, I could see it in my students, right? They're all addicted to the phones. I mean, most adults are addicted to their phones. It's not just a younger generation thing, right? That's on that high plane of like, this is not good for humans in general. But then the thing I want to float your way, which I think is more nuanced and complicated. I'm seeing in the US, I imagine you are too in the UK, the gamblification of kind of everything. I'm seeing it first up in sports, right? The way you can now bet on sports in every last way, and it's becoming legalized, and there's parlay apps, and like there's nothing you can't bet on. But that's kind of always been, sports betting has always been a thing. Now it's just easier to gain access. But all of a sudden, to me, this gets even more complicated with the advent of an app like PolyMarket. And there have been apps kind of like it, right? But now it's really starting to gain momentum and it's starting to go live. And on our Patrons, I signed up for it. I'm on the wait list and blah, 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 but it's becoming official. That stuff, though, has an actual function. Because, for example, to tell you what I mean, in politics, you take polls, and polls are a legitimate way to figure out what people want, what they don't want, who to get elected, who doesn't have a chance, right? It serves a function. And we know, at least we think we know, that from these gamified stat collection things, that as soon as money enters the picture, the stats become more reliable. That's kind of the basic thesis, right? So something like PolyMarket will actually tell you the truth more quickly and directly. Do you think, this is, I guess, the gray area, do you think there's this gray line between gambling on the one hand, the way you're talking about this covered stuff versus something like PolyMarket, or are they all categorically problematic?
I think there's a pretty clear distinction in my mind between like explicit gambling, which can, I'm a gambler. You and I both play poker, and if I've had a few beers, I like rolling the dice when I'm in the US. You can't play craps in the UK, but it's kind of fun. And I know my limits, and I know when I walk into the casino, I'm walking into this environment that is designed to exploit me. And I want to be entertained, inverted commas, for my investment of, running the risk. And so I kind of know what I'm getting into. I don't think this credit card thing is in that space. That sure, there will be some users who will treat it like entertainment, which is how the business model is intended. But because it's credit card debt, there's just too many people who have credit card debt, and they're probably, they've exhausted all their other sources of credit, and now you're giving them like one more tap they can turn on just to have like a final, shot at getting even, i.e. getting out from under this debt burden, and it ain't gonna happen, right? It's just like, it's gonna bury them even deeper.
Right. So it feels like the distinction is, if you're using something like PolyMarket, you're sure you're gambling now on everything, on who wins a senatorial race, or what's going to happen with the latest Fed cut rate, or any sports team. But in some sense, your position from which you're betting is more neutral. Whereas this particular thing is set up structurally to be most appealing to those who could least afford it. And that's why I don't think I'm too ashamed, or I'm not equivocating and calling it kind of evil, taking advantage of those that actually need help so that you profit. Right?
Yeah, agree. Like, betting on differences in opinion is one thing. And I can see how people could have a problem with that. I personally don't have a problem with that. But this credit card thing, it just seems pure predatory business model to me, like morally bankrupt.
Yeah, thanks for bringing this to our attention. I think the only investment-related thing I could add here is I've been using Robinhood as my main platform now for several years. I think they've completely pivoted to a whole different kind of entity from before. But it's also obvious to me that they're now going heavy into more of this predictions market stuff. So they're starting to evolve into a more conglomerate. There's the brokerage, there's the credit cards, and now the prediction markets. And it's actually quite, if I'm looking to invest in some sort of fintech, like modern version of the JP Morgans and the Wells Fargos of the world, I'm not sure why I would buy a classic bank when I could see these guys starting to get their hands into so many of these. I don't know if they're not derivative products exactly, but it's this ecosystem where gambling is kind of, I hate to say it, right? It's like the gambling instinct is kind of embedded in it, but how you use it depends on your own discipline and your own capacity to make wise decisions. I mean, I'm not sure it's a great product, and it comes with a lot of risk. So anyway, buyer beware, but I guess that's a kind of indirect bullish case for Robinhood, ticker HOOD. Just know what you're doing when you get involved with that kind of thing. It is very slick, and it is very, they make it as easy as possible for you to engage with it as much as possible, which is the gambler's dilemma.
Yeah, and even they got slammed for being too gamification-y in their early days. We had I never used it, but I saw like the news reports of, when you place a trade or like an options bet, you see, some like streamers go off and like some cool sound effects as like, woohoo, like you've just done something. So, and they got in trouble for that. Anyway, dig me out of my funk, Christoph. Let's talk about something different and kind of cheer me up. Although I'm not sure this next topic is going to cheer me up, but.
So, I made a big trade recently. How long ago? Last week, right? It was last week, where I got very, very excited about PayPal maybe a couple months ago, and I did an immense amount of work. And I was very confident in that thesis. And so I bought shares and I bought some calls, and then I ended up selling them at a decent loss to Monkey's portfolio. So that's the setup. But I've realized I want to talk this process through. because what I heard, everything I heard on the last earnings call, by the way, Badger, was incredibly positive. So the fact that it was down after the earnings call, I didn't care one bit, right? It was just, that inefficiency that you get to exploit sometimes. And because my call option was, I thought, dated far enough, I was like, it's going to be fine. But what happened recently is that at not one, but two investor conferences, basically the top suite, both the CEO and call it the vice CEO, I don't know if she was CFO or COO, one of those top brass people, went on the record, I think very, very honestly, and said they are seeing some serious slowdown in consumer spending on the lower and middle tiers of their platform. So obviously they're talking about the economy in general, right? And some of it is, I'm sure, company specific, but when PayPal, with all its massive numbers of accounts, I think 450 million accounts, it's a lot, right? And so on one hand, good for them for being honest, but two, that completely, in a sense, it doesn't wreck, but it seriously throws a monkey wrench into my thesis that the turnaround is now just around the corner based on the Q3 report. The stock, it's well known in the investing community, has been on a massive downward trajectory and kind of stabilized at very, quote unquote, undervalued prices. And so this turnaround would need, legit fuel in its belly. And when the top brass is telling you something quite opposite of that, my conclusion, I think legitimately, is that turnaround will happen, but it ain't going to be next quarter. And it's probably not going to be the quarter after that. And it might not even be the quarter after that, right? So now all of a sudden we're sort of like 9 months out, right? Which to my mind, given the fundamental understanding that I've built up in this company, the moment I do see what I'm going to, be looking for, then I get to get back in. But why keep my bananas in this investment simply because I had already bought it? That's kind of thought number one, right? It's sort of the sunk cost fallacy a little bit.
I got a wry smile because, like, if you wind back about 10 episodes, when you pitched PayPal, I got my claws into it and we had a bit of a debate. And like, I seem to recall the foundation of my pushback was that if we go into like a difficult economy, like a near recession, like the kind of transactions on PayPal are the ones that are going to get smashed much more than like a Visa or a MasterCard or like a regular bank transaction. So you should listen to me, buddy. Didn't listen to like an earnings call for them.
Yeah, well, but hold on. I'm going to push back a little bit. You're right. You're obviously right, because what you were warning about, right? The people, they were like, yes, this is true. But at that moment, that was a conditional, because you don't know and nobody knows, right? I mean, it could have sort of swung the other way and we could have been like, oh yeah, resilience is coming back. Customer spending is coming back. I think the larger point I'm making here, it's a little different than who's right about PayPal, right? It's a different point I'm making. I wanted to acknowledge, I think to my credit, that despite being very convinced about my position just a month ago, new data came to light and I'm not waiting to act because I'm not stuck in the sunk cost fallacy. That's the first half. And I think, correct me if I'm wrong, Badge, I think many investors have a very hard time doing what I just did.
Yeah, it's like you have to admit that you were wrong in some aspect. And some people find that hard to swallow.
Right, that's point one. And then part two is, but I already lost this much and I'm going to wait for it to get back even, is the other mindset you see quite often, right? I took no pride in, selling my calls, whatever they were, June calls, at whatever, I lost like 300 or 400 bananas on that trade because it was an aggressive trade to begin with. And, when I post on the Patreon account, Monkey is closing his calls and it's at a 40% loss, that don't make me feel good, but it's still the correct decision, right? From my new perspective. So that's what I do. But here's the second half to this, which takes us in a very different direction, two different directions. Sorry for talking your ear off. Jump in, anytime. The other piece of it is I had a much better place for my money.
Just on that, that is the key. Like, that helps if as an investor, if you're struggling with something in your portfolio, you feel stuck with it and you're waiting to get even. Well, take the emotions out of it. Try and get rid of that anchoring on, I paid $100 and now it's only worth $50. The market don't care what you paid. It's worth $50 today. If you think it's going to be 2 years to get even, if you don't have a better place for your money, then maybe it makes sense to keep it invested. But if at that point you have better ideas, and better ideas might just be putting it in cash or putting it in treasury bills, right? If you think the thing's going to go down even more, if you've got a better place to put the money, then, make that transaction. And even though you may, after 2 years, you look back and go, oh, I should have held on to PayPal because I got my money back. Well, you actually need to look at what you did in the round and go, well, where did I put that money I released? The losses, but I got some money back out. Where did I put that and how did that grow? That's the true comparison.
Right, exactly. I'm afraid I think right now, if I step back and look at our two investing styles, I would legitimately say you are practicing long-term investing through and through, in part because of where you are in your life and, how you the fact that you live off of your portfolio, and doing the sort of anything outside of long-term investing just doesn't match your profile. Whereas I think I'm now, I self-assess as kind of long-term investor in theory, but in practice, I'm a little closer to the swingish. I'm willing to sell earlier than I thought in order to take advantage of something. So call it medium-ish, long-term-ish profile. Anyway, point being that outside of PayPal being able to buy back a bunch more shares cheaper, which is potentially the one catalyst that Wall Street will be watching very, very closely, it became very, very clear that after I had done a stupid amount of due diligence on this new company, UiPath, stock ticker PATH, I absolutely was jaw dropped at the opportunities I see in that company. That when I had that moment of insight where I was like, why would I, if it's the what's it called, mental model of, if in this moment I had to buy one of these two companies, which would I buy? There was zero question that I would not buy more PayPal, I would buy Path. Then I just took that extra step and say, well, but I already have PayPal and I don't have Path. So that's the wrong way around. Ergo, I sold PayPal and I bought Path, and lo and behold, I wouldn't say I got lucky, but the earnings results for Path were absolutely, terrific. It shot up 30%. My call on that is now up 110% in a week's time, so it was very, very well executed on my end. But it's the principle that I want to address. And there's a follow-up to that. So I'll pause. You got any other feedback on that kind of switcheroo?
It's good. Because the other aspect of sunk cost fallacy is your time. Because when you do a crap ton of research on something, you don't want to make a decision not to buy it, because then essentially all that work was kind of for nothing. You avoided something as opposed to making something. So you did a bunch of work on PayPal, but now you've had to set that aside. Maybe you come back to that one day in the future when something turns around. You've got the foundational knowledge, but that's the other win, I think.
Right, absolutely. Oh my God, that's so, as important, I think, as what I was talking about before. Anytime you invest in knowledge, I guess we would call, right? That is not wasted time. One, now I caught myself up. I think about a lot of fintech-y stuff. You're our resident fintech expert. I don't think I'm anywhere near your overall base of understanding, but having understood PayPal quite well, I think I'm more conversant now. And that knowledge will absolutely come in handy as soon as, the next whatever PayPal investment day is or earnings call. Now I'm hearing what they have to say with brand new ears, and I'm going to be primed and eagle-eyed and ready to pounce as soon as, the thing I'm looking for shows up. So now it's just a question of being patient and keeping it, on the radar, like top of the watch chart.
Cool.
Okay.
All right.
That segues.
Tell us about UiPath then, because I know about this company from years ago, and it seemed like a pretty horrible business model. But what is it now? Maybe it's totally different to what it used to be.
Well, Badge, I think I want to do a really deep dive on Path. I want to save that for a future episode, if you don't mind. But to your point, what's interesting is when I start going down UiPath, the research hole, you know where I started? I reread Steve's 7 investment pitches from, what was it, 2021, 22, including some of your questions. It was like it was revisiting some old times, right? And it's fascinating because he was wrong. Steve was wrong in terms of the timing, and it was the bubble, the AI bubble, and the robotic process automation segment, the RPA stuff, that's what UiPath used to be. But now it's making this massive pivot into what I call like an emergent new paradigm, which I'll talk about at a future episode, because there's a lot to say about this company. I think for our listeners, it's enough to suggest go out and start researching Path on your own now, and then I'll help you along with what I discovered in a future episode. That is a segue though, Badge, for me to drop a little alpha on Monkey's new workflow. And I'm curious to see how it compares to yours. I probably should have talked about this sooner, but right now I'm so comfortable with it, and there was something happened that made it a lot easier for me. What I'm talking about is I now use, what's it called? I said Google Lab Notebook, but it's not. What's it called?
Only because we briefly talked about it pre-show. It's a NotebookLM is the tool.
That's right. That's right. I don't even know what the thing's called. NotebookLM. It's a Google tool, or it's based on the Google platform. And when you first pointed out to me, what was it? Over a year ago now?
Sure.
Yeah, I mean, you were one of the. I think I heard about it from you. I'm pretty sure I heard about it from you. There was a bug in my system where, actually, let me take a step back. All it is really is it's kind of your own mini LLM where you get to decide what sources you upload to it. And once you do that, it does the LLM magic where it basically synthesizes whatever you fed it. So you control the narrative, basically. Now, the bug I ran into in the last months is often when I would upload a source, it would reject it for some silly reason. PDFs or JPEGs, or I would like drag the thing and I would get a warning, and and then I just got frustrated and put it away. I'm like, this thing's not ready. Well, lo and behold, maybe 2 months ago, that bug went away. Maybe it was user error on mine, who knows, but bug's gone away, and now I can upload sources with ease, and I don't get any of the monkey wrenches. So here's the alpha, Badge. I've now trained myself, and this is about habit making, that anytime I'm in stock research mode, anytime I find something that I feel is credible, I don't just read it and forget about it. I copy paste it or I download it and I immediately shuffle it off into the notebook on Google, and it allows you basically to create new notebooks. So brand new ticker. So my workflow now is I'm researching something, let's call it UiPath, right? I create a lab notebook. I title it Path. There it is. Now I'm researching stuff, right? Company presentations and people on X and some YouTube videos that I found. Analyze it in the sense of, is this legit or is this garbage? If it's legit, I copy it, I paste it into the lab notebook. And before I know it, And I continue this process like over and over again. So by the time I got to Path, I had something like 35 sources, because it keeps adding, right? Like unlike your memory, sticky notes or writing things on paper or even using Google Docs, it kind of gets overwhelming and it's like too much information. And then you forget this thing, you forget that thing. With this tool, all of a sudden, right? My job was basically finding the good stuff, the human element, and then trusting that the LLM would do the work that LLMs are now good for. And then once I clicked the ability to synthesize, and it does it in really cool, magical ways, which is for another episode. What came out on the other end, to me, was, I don't know, I don't want to overstate it, but it feels like magic. It feels like stunning. Like what came out on the other end was, I thought, legitimately incredible synthesis of all these documents and YouTube channels and tweets and so on and so forth. So, TLDR badge, from my perspective, if you are an investor today, you are doing yourself a disservice if you are legitimately not leveraging your work in this particular way. And I want to say, last thing, that in our own Patreon community, right, we have people bringing forth a bunch of good ideas, right? This ticker, that ticker. If you are listening to this and you're not yet organizing your research in this way that I'm suggesting you begin experimenting with, you're slower than you need to be, basically. Right? You're not taking advantage of this new revolutionary thing. And I'm gonna say it very clear, very point blank, because I felt it in myself. Sorry, I realize this is a little bit of a soapbox rant I'm going off on. There's still this, I think, quasi feeling of shame. Like if I'm like collecting all these resources, but then I'm letting the LLM do this work for me, is that ethical, or is am I cheating somehow, right? Or is this because it's the LLM that's spitting out the kind of condensed version of all of those sources. And I think that's just, and I'll turn it over to you, I think that's just the remnant of the old paradigm. And now I'm noticing the discomfort of what it means to evolve into this new thing. So I'll shut up there and ask for your feedback.
Yeah, I think we're going through this transition where it might feel like you're cheating to use some of these tools, but it's in the days of abacuses and however people used to do math with the tables to work out multiplication and stuff. When calculators came along, people probably felt like they're cheating to use the calculator, not the abacus. But calculators became spreadsheets, became other tools, right? And they just accelerate our ability to get work done efficiently and do more work. And so these LLMs, I agree, are an incredible learning tool. Out of interest, have you tried generating a podcast discussion from any of your NotebookLM contexts?
Yeah, exactly. So that's, I elided that. There's 3 things or 4 things that the lab notebook can do. They could generate a conversation that sounds like a podcast. It generates slide decks. And I uploaded one of these slide decks when one of our patrons talked about T1 Energy, because I had also been researching it on the side, and I didn't want to say anything yet, but it made this amazing slide deck. So I'm like, here, this is what AI helped me make. It also makes mind maps and it makes slide decks. I mean, it's kind of mind blowing, right? And that's why, so yes, I did that. I think this is why.
Okay, good. Good. You're using these tools. Let me give you because you asked, what am I using? I haven't started using it yet, but I've literally just used it for the first time. So literally in our show notes live, I've just dropped 2 pretty pictures. What you can do with these tools now, this is Gemini 3 with Gemini Nano Banana. This is kind of dumb. I know nothing about UiPath. I literally just said to Nano Banana, give me a fun diagram that just helps me understand what UiPath does. And I got this pretty picture of like a chef trying to make a cake and deliver it to like the lady in the restaurant, like the steps that the robot goes through. And sure, that, it seems a bit kind of kitsch and cartoony, but then I also asked it to create like a whiteboard professor level detail. And, that version has much more detail. Like, and this isn't going to teach me about UiPath, but if I'm just coming at a topic totally cold and I want to understand something, like some of these pretty pictures, they just engage the brain in a different way than just reading words. And, you're a great fan of drawing like mind maps. I've seen some of your incredibly complicated mind maps as you go, you read a book or you're trying to simulate information. And, you can get these tools to create like this very beautiful mind map for you now. And it makes sense. I mean, UiPath, we're looking at this professor graphic. Like, does this tell the story of kind of how UiPath works?
Yeah, I mean, as an initial step, absolutely. Though, here's the caveat. Looking at the more professional one, there's a lot of jargon in there, right? And there's a lot of ways that I think it still might make you think you understand without really understanding it. So here's the caveat. Let me TLDR this. Maybe this will make a good YouTube short. Here's, I think, the workflow I'm encouraging our investors to undergo. You find the sources you want to understand. So you're researching UiPath. There's a YouTube interview with the CEO. You actually need to listen to that. You need to take the time and put in call it hour and a half to listen to what the guy says so you could genuinely understand the message. But instead of then leaving it at that, I'm going to take that link, I'm going to copy it, and I'm going to paste it into the lab notebook. Then I'm going to repeat this process, call it times 10. I'm going to do that work 10 more times. So now I've actually like reading the book, like analog, I'm downloading things on my own. I'm thinking, I'm processing, I'm learning. But at the same time, I'm collecting that information, and the way that thing's going to synthesize it for me is going to help me gain all these new insights that I could not have had before, but I've done the work on my own first. So it's like a synchronous, like it's a do the work, collect it, and then have the magic AI synthesize it. And then it's going to spit out these fancy slide decks and pictures. And when you look at them, you'll be like, oh yeah, shit. Oops. I mean, oh yeah, poop. That is correct. Or no, that's off. And that's going to get you to deep, deep understanding so much faster than ever before. And I think we, as individual investors, this is what it feels like to me, Badge. We're in this golden era of investing where what would have taken, professional level analysts working for some, a private equity firm, we could now do this ourselves so much faster than ever before. We have no excuses left for underperforming the market, especially when we make one of these things and we share it with our own investment community, right? We're exponentially quickening the pace of how quickly we could find the next great investment. So I couldn't be more excited about this, and I hope this was useful. Sorry for the rant.
No, it's good. Yeah. And like my TLDR is like, don't be ashamed or embarrassed to use the tools that are available to you. If you're using AI, you still have to sort of distrust it to some extent, and look for like multiple sources and do your own research. But these tools will help you do that research so much faster.
Right. Yeah. And, maybe one more editorial, coming from the academia, you don't want to plagiarize. Plagiarism is, I think, a cardinal sin because you're passing off work that's not your own as though it were. And now when I go on X, I see all these brilliant takes, brilliant analyses of companies that just, was something during our 7 investment days, when we would make a pitch that would take us, weeks of work. Now people are doing, it's all over the place. And obviously most people are not giving credit. They're just saying, look, here's this brilliant analysis of this company that I just did over the weekend. BS, they obviously used AI to do it. I don't know. In etiquette terms, for now, I still like saying monkey used AI, use the help of AI to make this slide deck, and then I upload the slide deck. To me, that feels like sort of like, like, I don't know if that's needed or will be needed in the future, but
Probably won't. Like as you say, like we assume that if you're smart and you're using the tools available to you, everybody's using like these AI tools today. So it's just kind of a standing assumption. But, don't let the tools make your decisions for you, and don't find yourself like parroting what the LLM said. You might use them to distill your opinion, and maybe, like if you have a bull case, get the AI to give you the bear case, and then, try and pick it apart. Like it's going to be like a super powered mentor and researcher and consultant. It's going to help you get to your thinking, but you have to have your own thinking. Like if you're outsourcing your thinking to the tools, like you're going to be in big trouble.
exactly. And I guess we could end this segment with a kind of challenge to our new patrons or our Patreon community in their new Wall Street Wildlife portfolio. We now have a slide deck where we're asking you to upload your own pitches. So what Monkey's saying to you is there's a way to make your pitches even stronger, and it takes following these steps that I'm suggesting, but don't be afraid to, get out of the mental habit that at best you could write a couple of sentences. At this point, I don't think it's out of anyone's league to put in a couple hours of research into a stock ticker that you're interested in, but then what comes out on the other end, if you follow this process, will be just so much more sophisticated than you thought possible. And then, you could upload that with whatever caveats you want to offer us that, so can't wait to see your pitches based off of this rant. Okay. That was too much yapping, too much screeching and howling. Badge, can you update us on some new rocketry that's happening over at SpaceX? What are those? What's happening with the latest hubbaloo?
Well, maybe it's like a nothing burger. So there has been some unsubstantiated news in the last week that SpaceX are talking about an IPO in the back half of next year, like towards the end of 2026. And actually shout out to our Patreon, Andrea, who you had cocktails with a month ago and who I'm having lunch with next week. Because she drew this to our attention. Apparently Andrea and I are both SpaceX shareholders. She's got her eye on this one. I don't think it's going to happen, personally. Like, let's just, it might be interesting just to wax lyrical a little bit about why a company IPOs or why a company goes public. Mostly, there's a bunch of reasons, but mostly it's about raising money. And going public has a lot of costs and complications and headache around it. You suddenly have to have a different level of financial reporting. You open yourself to the kind of problems that Tesla had a decade ago, where Musk basically went to war against the Tesla shorts and even had shorts, like a little skimpy pair of shorts for ladies to take the pee out of the shorts. And you can, when a stock is public market, shenanigans can happen. When a stock is private, it's a bit more controlled. You have much more control over the cap table, the ownership, not complete control, but more control of the private company. So there's a lot of downside to SpaceX IPOing. And the main upside would be around fundraising. And that just doesn't seem relevant to me for them, because investors are throwing money at SpaceX, probably more than any other company. And it's I don't even know that they're issuing new securities in this rumor, this most recent announcement. But there's going to be a secondary sale of stock, a $800 billion valuation, which makes me happy because I bought stock at the $225 billion valuation. So on paper, I'm like a 2.5x, I guess now, if that happens. So yeah, I don't know. I just don't think that credible to me. I don't know why they would.
Yeah, and what's interesting is that Musk himself denied it. Though at this point, it's so weird. I really don't trust anything Musk says because it could be very, very true and he's seeing further ahead than anybody else, or he could be legitimately manipulating things for whatever business, and minded reasons he needs to manipulate things for. But he did categorically deny these reports. So
But it'd be nice, right? Because there's say a bunch of investors in our Patreon community that I'm sure would love to be SpaceX shareholders. Kind of hard to do that. You can buy it today by buying certain ETFs, but then you get SpaceX along with a whole bunch of other stuff you may or may not want to own. So, there's benefits to investors, but is there a benefit to the company itself? Probably limited. Maybe if there's any benefit, I don't know, maybe it would help them in negotiations with like the US government, because as a public company, the US might have a bit more confidence around their ability to influence their direction. I know that for very sensible reasons, like the US are trying to find other launch partners like Blue Origin, like Rocket Lab, because they don't want to be dependent on just one company. That's kind of you're creating a monopoly where you're the sort of victim of that monopoly. That's not great.
Yeah, I think it would be good in general for those reasons, especially when you get government defense in mind, and I would be for it. But somewhat adjacent, we mentioned at the top of the hour that I have a little bit of an AST update, and this regards SpaceX in a way. The way I see it, Badge, at this moment is that these two it's going to be a duopoly in terms of space-based communication, but it's become, I think, more concrete than ever.
So just for clarity, we're saying that what you're duopolying there is ASTS SpaceMobile and Starlink, which is owned by SpaceX.
Correct. It's becoming more and more concretely clear, based on some digging I did this weekend, that Musk very much is intending to create his own communication network. I mean, it's just part of his DNA. I mean, he's a disruptor through and through. He has the capital. He has the world's leading rocket ship company. And so how does this...
They just bought $17 billion worth of spectrum, right? So you don't buy that unless
No, there's no doubt. Yeah, there's no doubt. But, what was somewhat implied even a couple months ago, now to me is clear as day, that a company like T-Mobile, which partnered with Starlink, is, I don't know how else to say it. I don't know. I would love to be a fly on the wall in their boardroom meetings right now, because it could not be more clear that Musk does not have their best interests in mind. And so where or how soon will T-Mobile have to jump ship and join AST is now, I think, a question of when, not if. Which means that I think this case that I'm making between this is going to be a duopoly between, Musk and SpaceX and AST, and on an absolutely ginormous market, I think bodes fairly well for both competitors. My money is obviously on AST because fundamentally I think they have the technological advantage which will last them for many years. And then it becomes a sci-fi story, execution and risk and so forth. By the way, the first launch is happening, I believe is scheduled in 1 week from today, December 15th from India. So that's going to be exciting for AST shareholders. But regardless, this is a fun race, that we're seeing play out. But the in the moment dominoes in terms of on the ground operations are starting to really, really stack up in AST's favor. And it's just a fascinating soap opera to watch. So hang on tight.
I'm a shareholder of both. And I know I defend Starlink heavily when we have these conversations, but like that will be quite an important moment for ASTS. I think they're now putting up for the first time like the bigger version of one of their satellites. So like if they can successfully put that into orbit, unfold it, and get it like operating, then they've actually de-risked the like the technology, the sci-fi bit very substantially, but don't go betting the house on this because there's a whole bunch of stuff they need to get right for that to be successful.
Yeah, I think that's a very sober take. Monkey has resisted adding to his AST position repeatedly for that very fact that, there's still going to be massive gains to be made, but you want at least a couple more of these satellites actually floating out there in orbit. And then, then Monkey might even do something like once they're in orbit, buy some long dated calls to try to leverage that upcoming launch cadence once we have more proof that the big guys can float. But until then, it's still a risky proposition. So,
all right, Christoph. Now, we're recording on the 8th of December, and it ain't long until it's Christmas. And by the way, actually, I do want to say this. Check out last week's episode, episode 109. I think we're going to make this like a regular fixture every year now. So we just recorded an episode with our latest thoughts on how to get started investing for your kids. And so, I know if you're listening to this, you guys probably know this stuff. You know how to open a brokerage account, and you know how to buy like passive index trackers and do stock picking. But take that episode 109. We've given you some links on our Patreon. You can just go pull it off YouTube or Spotify or Apple Podcasts. Send it to a friend or a family member who has young kids, and then try and help them on that journey to get started. And you be their investing buddy. We use our material to help you do that. Because, it's just such an incredibly important thing. And the big message last week's episode was try to avoid spending so much money on landfill toys. Maybe balance it by, as Christoph said last week, buy a Nintendo game and buy them a share in Nintendo, get their investing journey started. Anyway.
That is such a brilliant idea, Badge, though. When you hear it said back to me, I'm like, Monkey's a genius. Am I really that effing smart? Hey, you know what? I got to say, I try not to proselytize about our YouTube channel and our Patreon, because it's kind of, I mean, you're a Brit. You're naturally humble, and you don't, for the most part, you don't self-aggrandize. But I think this is one of these exceptions where I was okay copying our YouTube channel link and our Patreon link, and I actually sent it to a bunch of my friends. Literally just kind of cold sent it, said, listen to this, because even if one or two of them listen to it and actually act on it, lives will be changed. So you might as well, right? You might as well try to be a good human for a good jungle cat or dolphin or capybara or whatever creature you are, and take the shot, right? Just copy that link, send it to your friends list, and it'll be the best gift, best service you've done for a bunch of young people. You could. So don't be shy.
Do you mind if I won't quote it directly, but do you mind if I mention the WhatsApp you forwarded to me just before we started recording?
Yeah, please, because I got that this morning. Yeah.
Yeah. So anonymous WhatsApp from someone in Christoph's close circle. He starts off with, golly, I am so proud of you. This person says they've gone from living paycheck to paycheck, and now they're still kind of doing that. They're early in their journey, but they have a growing stock portfolio. Clearly they have a different outlook on money, and they see a route out of, literally just paying the bills and getting by. This is what episode 109 can do for you or for your friends.
Right. And what's implied there, Badge, just to spell it out, is living paycheck to paycheck is actually a reality that way more people are under, even though it's, I imagine most people try to hide that fact. But when you have something like what we're talking about and you actually take that first step, what you get is a little bit of hope. Because it might not be tomorrow, it might not be next month, it might not even be a year until you could get out from the paycheck to paycheck model. But with hope, knowing there is a way out, you could walk those days in between with head high and heart, and heart with more confidence. And that will eventually get you out. And so we could not be more sincere in asking all of you legitimately copy our YouTube channel or copy the Spotify link and send it to whatever, 100 of your people.
Yeah, just that one episode. Just on that one episode, tell them to listen to this. And like, if it makes sense, ask them to talk to you and you'll help them on that journey. Like, you could be making a big difference to somebody. Yeah. So that was the like last week thing, but we're looking ahead. And so what else do you do at Christmas apart from buying gifts? You get drunk and you have a party. Well, most people, that's what we do. Yeah.
That's right. That's right, Badge. I see many, many more banana pants cocktails in Monkey's future. And so we were chatting before the show what would make for a reasonable potential date on which to do our next live stream holiday special bonanza episode. And we've isolated Friday, December 19th as probably the best bet because it's a weekend-ish. It's the beginning of a weekend. Now we just have to coordinate what time slot would work best since we have fans all over the world, the UK and the US, and there's, conflicting schedules and all that. But I think we're going to put a poll on our Patreon site, what would work best for most people. And we're aiming for maybe somewhere around like 3 p.m.-ish Austin, which is Central Time, which would make it 9-ish UK time as the initial gambit, thereabouts.
Like let's frame this like what this thing is, because you may not have caught our like chaotic Christmas party episode this time last year. So we do prediction every year, and we both made some pretty wild predictions for 2025. So I don't know if we'll do it exactly the same way. We might try and introduce some more fun and games as well. But we basically went shot for shot, and we on a live stream with our Patreons. We reviewed our performance in the predictions episode, and whoever was furthest from the pin had to take a shot. Monkey took quite a few shots, but I think, I don't recall, was it a dead heat or did you just win? I think you may have brought it back at the end and just won. I haven't looked ahead. I glanced at it. I saw at least one prediction where I kicked your ass, but I haven't looked at all of them. So I think there might be a lot of shot drinking for both of us.
Indeed, and some of our patrons. Maybe we could play a new game called Pin the Tail on the Badger.
So anyway, fun and games directionally Friday the 19th of December. If you're a Patreon of the show, including our glorious sloths, we're going to send you a link so you can join us live and be part of the fun. You don't have to show your face if you don't want to, just like be there in the chat. But if you want to come on stage and like raise a glass with us, that'd be delightful also.
Right. This is saying the obvious too, but man, investing is just so much more fun when you have a group of friends that you're doing it with, I mean, it is about making money. Yeah. Right. But having holiday shots with people you've never met because they've followed you on this journey, and the trust has been built, and it's just so much better. It's so much better doing it this way. So thank you all. Oh, hey, you know what? Speaking of, I think it's okay to mention again that we're planning our first ever Wall Street Wildlife in-person get-together. And I think some of our patrons asked what the rough dates are. And correct me if I'm wrong, but we're aiming at the moment to make it kind of late March, mid to late March-ish. Is that where we're at with that?
Well, better than that, we have a definite date because I've booked my international flight.
Oh.
So it's going to be like surrounding Saturday, the 28th of March. Christoph and I are going to be in Vegas. We haven't worked out the itinerary, we'll be there at least a day before and a day after, but we're going to have some hijinks and shenanigans. There will definitely be a private poker tournament for anyone who joins, see if you can beat, well, you're certainly going to beat Christoph because I've played him and he's diabolical, but you can beat me at the poker table, let's see.
Small sample size of 2 hours. Come on, buddy. But you did. Hey, this is why I need a Badger in my life as project manager. Here I am thinking we're still shopping around for dates. And you're like, no, I have my plane ticket and it's on this date. Get your act together, Marky. Oh my God.
Yeah. Yeah, more details to come. But if you think you're going to be in the vicinity of like Nevada somewhere within a couple of hours flight, like stick it in the diary, Saturday, the 28th of March, 2026, and more details will follow.
Right, that's so funny. If you happen to be wandering through the Nevada desert at the end of March, you could possibly find us at a poker table in the city of sin.
Yeah. But it's not far off. What's that festival in the desert?
Burning Man, but that's in August. That's like advanced. That's for the later. That's the advanced Wall Street wildlife community for probably unicorn tier only. We're not quite there yet. Awesome. Are y'all ready to become beasties of investors?
If you don't shape up, listen to episode 109 because your journey starts here.
Right.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.